So I am over right now at one of the investment properties. So this is the third one, tenants checked out. We've done a refurb on this one, and this one's going on the market next week. So what I want to touch upon is, why did I decide to transition the portfolio into buy-to-let property rather than just continuing to build a dividend portfolio? And I think I touched on it in another video, but for everyone, you ask anyone, what do they aspire to achieve over time, whether it's in their job or whatnot, and it's an element of freedom for a lot of people to do what they want, when they want, with who they want, and where they want. So for me, if I was looking at building a dividend portfolio in the UK, you can only invest £20,000 into your ISA, and to achieve what I am getting currently from 4 buy-to-lets, I would need to essentially have a portfolio value of anything between £300,000 and £400,000. And if I look at the cap on the ISA is 20 grand, if I was wanting to invest into that, I would obviously want it within the tax wrapper. And it would take me the best part of 15 to 20 years. I get it, there's compound interest, there's dividend raises, it might be a wee bit quicker than that. But if I'm looking at where I'm at the minute, I don't really want to be waiting 15, 20 years to get that element of freedom. So that was why I chose then to transition the funds in 2020, 2021 into buy-to-let property. So as I say, both have their pros and cons. There's no right or wrong answer. You can do both, you know what I mean? I think it's, you see it, oh, property versus stocks, it's one or the other. It's like, no, you can do both. For me, going forward, I want to build this property portfolio. I want to try and get another couple of buy-to-lets if I can get to 6. I'll see where that takes me with regards to income, and then decide. It might be a case of I get to 6 and I'm quite happy there, and then transition the funds that I'm making and then put them into a dividend portfolio and invest into your blue chip stocks. So your Coca-Cola's, Pepsi's, Johnson & Johnson, Legal & General, Aviva, Lloyd's, these companies that have been around for donkey's years. Might be a case of then diversifying the portfolio. As of right now, but the philosophy for me is to invest into growth. So tech stocks, like you've seen there, I've got some of the biggest tech stocks. So the Mag 7, essentially, I've picked out a few of them that I want to invest into, and then a couple other up and coming stocks like Palantir. I've got AMD, I've got Booking.com into it. All these companies that I'm investing into, because I'm looking at growth and I want to transition the funds from that and then buy more buy-to-let property. So that's my thesis just now. As I say, there's no right and wrong. It's horses for courses. Everybody's got an opinion. You know what I mean? So when you hear people saying, oh, fucking buy-to-let's rubbish, you shouldn't be investing in that because tenants are fucking... Like, it's what suits you, what suits your lifestyle, it's what your goals are and what you want to achieve. For some people, dividend stocks are absolutely the way to go, and there's nothing wrong with it. For me, as I say, right now, what I want to achieve, buy-to-let property is the vehicle that I've chose. But as I say, work out what it is that you want to do. Don't listen to anyone else tell you, oh, you should be doing this. As I say, when it comes to it, potentially for me, it's probably going to be a bit of both. You know, I'm going to get to a stage where the income from the properties I'm quite happy with. Obviously, there's downsides of buy-to-let property as well. You know what I mean? It's not liquid. You're at tenant risk. In the UK, is there market risk? Potentially, if they go on a massive building spree, but I don't see that happening anytime soon. They've not hit targets in, what is it, like the last 20 years or something. So, but also as well with dividends. Like, if you look at a company like Walgreens, been around for nearly 100 years, and it should cut its dividend, and it looks as if it's waiting on a buyer coming in to save the company. So there's risk in both, but I think there's also a bigger risk in not investing as well. So yeah, that's the reasoning behind the transition to buy-to-let. And as I say, I'd want to try and get a couple of properties within the next year, I would hope so. And then at that point, reevaluate, see where we're at, and then it might be a case of transitioning into dividend paying stocks. So if you've got this far, like, comment, subscribe.